Hi, ladies and gentlemen, and thanks for joining me for another edition of Behind the Business. I'm your host, Robere Kazadi. Today, my guest is Daniel Erb of EM Capital. And Daniel has a lot of stuff to say about real estate and the rental market specifically. And I'm excited to get to know him and have this conversation. Daniel, thanks for being here. I appreciate you.
Thanks for having me, Robert. I'm excited to be on and talk some more about what we do.
Right on, right on. So, Daniel, take us back to the beginning, if you would, and you can give us the short form, but how did you end up in single family rentals?
Yeah, so I was working in investment banking during COVID, and if we could all just rewind a few years when the messaging was slow to spread and everyone was on lockdown, working in healthcare M&A, basically all of my deals went pencils down. We were waiting for further guidance. Nobody knew what this new world would look like. And so I just went from working 80, 100-hour weeks to 5 to 10 hours of work in a week. And so I decided to use that time to start looking into real estate investing. It was something I was interested in from my time as a CPA. I knew about some of the tax advantages and I went for it. I bought a condo, actually, not a single family home, a condo as my first rental. And yeah, some things went well, mostly went wrong, and fell in love with finding solutions to those problems when things went wrong and built a business from it. So started raising money from other investment bankers, mostly my friends, colleagues, superiors, and yeah, we pooled the money together, had a fund, and bought a few more properties. And at that point, I felt this was something I wanted to spend my career on. So I pursued it full time.
Okay, where are you buying your properties? I know that you're in the New York area. Is that where your focus is, or are you finding rentals that fit the model anywhere across the country?
Yeah, so we look throughout the entire country. It's an inverted approach from the typical real estate operator. And what I mean by that is typically you're buying local, you're buying what you know, and because you live in that area, you're able to have unique insights. I was living in Chicago. I was working at an investment bank. My partner was living in New York City. Neither of us were very excited about our local areas. We also didn't want to necessarily deal with the local municipalities and some of the public policy that I think was not necessarily landlord friendly. And I went to school in Indianapolis or in Indiana, sorry, University or Indiana University. Go Hoosiers. And so I saw firsthand flying into Indianapolis each year from New York just how much improvement and development and investment was being poured into that city. And my cousin working at BlackRock at the time wanted to model out how much supply and demand was forecasted in Indianapolis over the next few years. And when we did that, we noticed something that there was this strong undersupply of single family homes in Indianapolis. And there was a growing demand with net migration and population continuously building, employers coming and flooding into that market, and then these strong anchor schools that just have this pipeline of talent feeding those employers. And we thought to ourselves, is this set up in other places or is it just Indianapolis? And so that's when we started to grow and build outside of Indianapolis. And we took that data-backed approach and this supply and demand forecast model, and we were able to build it for the entire country now. So in real time, we are able to rank, common size, normalize all 387 metros in the US for future growth potential. And this sort of supply and demand econ 101 type analysis works really well in single family as it's behaves similar to other industries that leverage the sort of framework. So like oil and gas, for example, which is a supply and demand driven industry. We feel real estate, single family specifically, is very supply and demand driven. And if we can accurately forecast supply and demand, we could accurately forecast price.
So when you say accurately forecast, are you referring to the strand score tool that you guys developed to use?
Yeah, so it's
Or,
the strand score is something a little bit different. This was at a previous company, and it was not to get too technical or granular, but it was an elastic regression model, meaning what was the percent chance a certain metro would end up in the top 10% of US metros 3 years from now.
oh,
So it was like a probability-based ranking. The Resi Alpha tool is one applicable to both single family and residential real estate and multifamily, all residential real estate. Two, it is a linear regression type model. So it actually is forecasting and ranking cities not on their percentage chance of being a top 10 market, but actually based off of their intrinsic potential to be a top 10 market. And so we feel that it's a much stronger model, and it's also given us the ability to apply it across other asset classes. So now we have a supply and demand model for strip malls, we have a supply and demand model for office buildings, and it's baked off of this regression and analytical data lake that we've taken years to set up.
okay. So at EM Capital, then, are you, the goal is to buy and hold, or are you flipping these as well? Do you rehab them, or do you like to buy stuff turnkey? Do you rent to Section 8? There's so many questions. I don't know. Help me out. Help me understand.
Yes, and I think that there are a lot of great ways to involve yourself into single family rentals or just rental real estate in general. Eden Capital is actually my personal investment company along with an advisory business. So we built up a small to mid-sized portfolio of single family rentals in markets such as Indianapolis, Chattanooga, and Birmingham. And we're actually currently focusing on optimizing and harvesting that portfolio a bit. So we've not taken any outside investors since 2024, and we're not planning to anytime soon for EM Capital. While we were raising a $250 million SFR focused fund for Strand Capital, which was a real estate business I formed in 2024 on the back of BM Capital. Something that we noticed was just a lot of these institution light allocators. So call it family offices, RIAs, folks with sub $5 billion of assets under management. They are being overburdened by deal flow. And that it's never been easier to start a fund. It's never been easier to come up with a Reg D offering. And it's never been harder to quantify, normalize, and compare these different offerings because this market has become so saturated. And so while we were out raising capital for our fund, some of the folks that we were trying to get to invest needed an extra pair of hands for underwriting support and alternative diligence. And so we took this Resi Alpha framework, this valuation, this predictive analytics machine, and we turned it into a market intelligence platform. And we still use Resi Alpha for our investment decisions. But instead of trying to raise a fund and deploy that capital and then distribute the capital back, we decided why don't we work with these allocators to better invest their money to have more information at their disposal and to, be a little bit of a stronger counterparty to sponsors. And at the same time, we're getting to know these folks a lot better. And we think that 2027, 2028, we may be in a position again where we could raise a fund. But at that point, we would be inundated with or very integrated into these institutional light allocators processes. And so we think we'll have a better understanding of the market and we can build a better product for it.
Okay. So now that you've been collecting rentals, so to speak, how many units do you have now?
We have in our wholly owned portfolio for EM Capital, we have 15.
15. And are those single family homes or are those multi-units? What are those?
All single family detached. We're selling off actually three of them. And we're basically, I wouldn't say trimming the fat, but we're consolidating to a single entity owning the 13 to 10 to 13 best performing assets. And now that we've owned these properties for a few years and we've been able to increase rents, we're accelerating our payback of debt. And yeah, we are taking these proceeds from our sales and we are buying back ownership of the company from our LPs. So providing folks with liquidity that want it, and we're making this a little bit of a simpler cap table. So that way in 27, 28, we have this cash flowing, unlevered pool of premium assets that we could use as a launch pad for a larger raise.
Makes sense. Okay, I totally get that. It's not that 10 units is the sweet spot. It's just it's a way to position the company so that it's going to be easier to make the next move, so to speak.
Yeah, I think that something that hindsight being 2020,
Yeah.
that there's this every single investment business has this phases of okay, we're raising money, we're acquiring properties, we're harvesting the value of those properties, we're raising money, we're buying, and it's this continuous kind of cycle. And from my standpoint, I actually put in a significant amount of capital in those early days. So unlike the typical GP/LP fund where the GP has 2 to 10% of the equity, we have 40% of the total equity. And we're actively trying to increase that stake. And hindsight being 2020, we could have put in a smaller pool initially and raised something bigger. Or what I should have done, or what I wish I would have done, is just really focused on 100% owned EM Capital Fund. And the reason why is because would have had a lot more flexibility in terms of how we could leverage that for income, how we could leverage that for the platform overall, versus currently I have a fiduciary duty to these investors. And
Right.
so I need to provide these folks liquidity and manage these properties for maximum profitability at that portfolio level versus maximum profitability at the platform level.
I get it. I get it. That's good insight. A lot of guys might not want to say that out loud, but 2020 is huge and we've got to learn from our experiences. And thank you for sharing that because that really might help somebody. You know what I mean? Listen, let's transition a little bit and I want to talk about AI and your experience specifically with the this new technology that's upon us. Where has AI really moved the needle for you? How is it making your life better, easier, more enjoyable?
Yeah, I think it has really supercharged a lot of the infrastructure we built prior to the latest iteration of AI tools that I think has gotten everybody up in arms. Like specifically the Claude and how it has integrated seamlessly into Microsoft Suite. And I think that's made a lot of investment bankers. And look, when I was 22, 23, I was basically doing what Claude can do now. And I was being paid six figures to spend 100 hours a week in PowerPoint and Excel. Now that that value, is it really there? Is that worth the investment into the analyst for them to be doing something that could be done by Claude in less time and greater consistency? So my viewpoint on AI, at least, is that it's really a supercharging mechanism in its current state versus a replacement mechanism. And just junior analysts were doing the 120 hours of grunt work. Now that maybe that does move to AI, but you still needed a human being, an MD, to come in and say, okay, how am I going to transform this DCF valuation into a compelling pitch in order to convert into an engagement? And that's where it's, at least in the valuation world, it's more of an art than a science. And I feel like AI is struggling there. And so to answer your question in terms of my life, I view it similarly, where I feel like it's replaced a lot of the more manual, grunt, tedious work that I've had to take on previously. So that way I'm able to spend more time doing things such as going on podcasts or meeting with new investors or traveling to events. And so I think that it's mostly benefited me in terms of time saving, but I also think that it's multiplied and magnified the amount of work that I personally can delegate and get done over the course of a week. And so I think I'm still really early there in terms of realizing the value of that. But I'm hoping that this is something that can compound and stack upon itself and learn, and that as I continue to gather more feedback and speak to more people in my market, that my tech stack and my machine learning tools are also receiving that feedback and getting better and learning.
Evolving. Are you using AI to actually make investment decisions?
No, no,
No, not at all. You're just
no.
you.
Like I use it for the top-down analysis. So what I was with the 386 metros, that machine is run by AI. All of our data polls are run by AI, meaning our monthly updates with permit data in Indianapolis is being pulled, cleaned, and then kind of integrated into our underlying model by AI. Where I used to have to go in, I would copy and paste into a spreadsheet, and then I would clean up the spreadsheet, and then I would send it to our data engineer. Now that's something where we don't need the data engineer. We could actually run this fully from Claude Code. However, of the 386 metros, we take a deep human-led bottom-up analysis in the top 40 or the top 30. So we're looking at that top 10%. And so all of the markets we've selected, they were in the top 10, top 20% of our rankings. However, they also had these qualitative characteristics that our AI doesn't touch, such as public policy, such as reputation, or what local people in the market actually think about the changes that have been happening, and whether or not they are supportive of the city growing and the people moving here from California and New York, which is basically a common theme in all of the markets that we've selected. And so I still think the role of the human being is incredibly important, but we also built an investment process that an advantage is that we can take our time with these decisions. And if we were purely run off of AI in terms of which markets we were picking and where we were investing in, it wouldn't work with this private equity type model or the value add vertically integrated operator because it takes too long to port over systems and that sort of value add or local knowledge that you have.
It reminds me, as I listen to you, it reminds me of the fear that I hear from a lot of people when it comes to AI, and in that they feel, or some people feel like it's going to replace humans and it's going to take jobs and it's going to end up running everything. And I don't know. My experience so far, and I think you've said this, is that you still have to have the human touch involved in business. At the end of the day, this is business. And a portion of it, of course, is due diligence and some of the grunt work that has to be done. But that's not the final piece of business. That's just the beginning. You still have to have humans in there to review and to actually close the deal. So I get what you're saying. What about with your investors? Are you using AI to improve their experience?
Yeah, I think specifically on like real-time dashboards and apps and white labeling reports, that's something that we've found to be extremely useful with AI. And I think that that sort of ability it is completely novel. If you would have asked me 6 months ago to build app for Robere to log into and be able to look at all 386 metros in real time and their rankings and their bubble detection scores. Right? It would have been, okay, which vendor do I need to invest in? How long does the project take? How many meetings are we going to have? What sort of limitations may there be? And after spending, 25 to $50,000, I may find out that what I'm looking for is not possible, at least in the way that I envision. Where now it's something that I can spend a day, like a weekend, playing around. I shouldn't say playing around, but working in Claude Code on building an app with logins. I can personally test it myself to make sure there's no clunkiness. And yeah, we've been able to start rolling this out where we're providing monthly reports on macroeconomic statistics for independent RIAs, and it's tailored to their portfolio. So for people that are more fixed income heavy or more stock heavy, the macro report looks very different than somebody that is very heavily invested in alts. And at the same time, what each individual is seeing, though, is their own personalized report. And so the fact that can be built with a team of 3 people, it is unique. And I think, yeah, I think that is a technological kind of acceleration that I don't know, I've never experienced before. And that I imagine maybe early days of the internet, this is how it felt for folks. And maybe they felt like their jobs were being replaced, but we'll see. I think that it's a kind of a new world, but it's tough that to think that at least for investing decisions, that I would be able to take all the responsibility off my shoulders and put it
I
onto a
get it.
bot or an AI machine because like you said, I'm the one that's going to be holding the bag. I'm the one that needs to explain this. And personally, if I'm putting Daniel Erb on the decision, I would never let ChatGPT or Claude or any of these AI machines do that for me.
I love that. All right, let's flip it then and ask you this question. So, what do you wish AI could do that it's not doing for you right now?
Understand my intent. I think that's always the hardest part with prompt drafting. And I'm really glad that, yeah, what one of the greatest benefits of leaving my full-time job and pursuing this was having to pick up part-time work. And one of those part-time jobs being Wall Street Prep, which is leading financial education company. And they've been at the forefront of AI and finance. And I've been able to benefit from some of that as I'm now being trained as an instructor to be able to teach AI to junior analysts and associates at these investment banks and private equity firms. And
Cool.
so I think that, at least from my viewpoint, I would love if AI was able to take my idea, what I believe to be my intent, and then actually connect the dots. Because what ends up happening a lot is I will provide relevant data, I'll provide a prompt, and it will get 75% of the way there. And then when I try to take it the extra 25%, it loses my intent. And so it's just this constant kind of reminder of, okay, this is for this project, for this type of person. Do not forget that. Make sure you maintain these consistent stuff. So it's like that second, third iteration. I feel like loses intent and more so focuses on solving the most recent prompt. And so that may be a very technical, nerdy answer to what would I like AI to be able to do. But if it could just understand my intent, and
Right.
that way I could iterate on these projects a little bit easier, that would be such a huge, I think, inflection for these large language models.
Yeah, and that's probably coming. AI gets better every day. How long will it be until it's able to do that? I don't know, but it seems like that's got to be part of the evolution of this technology is just getting smarter and understanding prompts better. I have the same problem, and it's interesting that you would say that because the first one kind of gets close, but when you really try to dive into it and drill down and get it perfect, it starts going in a different direction. And you end up spending time trying to get back to where you were before you were trying to fix what it didn't do. It's just, this is the point. This is why I want to talk about AI because it's not just awesome on every level. It's just not. It's new. It's new for sure, and it does a lot of stuff. There's no doubt about it. But it's not perfect. And I don't know. At times, I feel like I'm wasting my time with AI because I don't get to where I want to go. I don't get it done. I get close. I start moving in that direction, but I never get to the exact thing. So that's just me. Anyway,
I think the training where you're like learning about how these machines work, it reminds me a lot about how I teach Excel in these courses. It is never Excel's fault. Excel is a machine, it's a language. You need to understand how to speak in Excel's language. If there is an error, if a formula isn't working, there's something wrong with what you as the user did.
right.
And it feels different with AI. And I want it to be different, but it really is the same. That it's when you're writing on these tasks and you're giving multiple edits, AI is cutting down the conversation, storing the chat, and then each new request it needs to relearn everything in that conversation, but it's
Right.
relearning a truncated version. And then it's taking that truncated version and it's building off of the truncated version. And it's how do you solve that when we're already at this structural undersupply of data centers and storing? And yeah, I think it's also on the flip side of it, everyone is letting a tapeworm into their business. We have zero control over how much AI is going to cost moving forward. And we're becoming more and more reliant on AI in the value chain. And it's like everyone's just letting a tapeworm into their business. And it's interesting, but yeah, I think Harvard Business School does these case study reviews, and they did one on small businesses. And the number one rule was don't let a tapeworm into your business. And it's like why we would never do like Ring cameras on our single family homes is because it's a subscription-based fee. We don't have control over it versus a igloo type lockbox, like a smart lock. It's a fixed price. And there's no software component, and we're not like we are reliant on it, but it's something that can be installed and uninstalled, and it's not bleeding into our expenses every single month. And so I think a couple years from now, if we have a real utility problem and it's starting to be very expensive to run AI, and you built a business that has AI literally sending every single email, responding to calls, building it out, sending it to the clients, like how do you solve for that? Your whole expense structure has changed and you have zero control over it. So yes, I think it's definitely a very fascinating time to be around and to see what happens moving forward with it.
Couldn't agree with you more. So we've talked a little bit about your background and what you guys actually do over there at EM Capital. We've talked about AI and how you're using it in your business and where you see the shortcomings and where you see the successes. So that's super awesome and good information. Let's wrap this up. What would your advice? Okay, there's somebody new, a new investor trying to get into real estate right now in the age of AI. What would be your advice to that person trying to get into this industry?
Where I was, I think that if you want to get into real estate as an investor, capital is king. And so how do you aggregate capital? How do you find people with capital? That should be your first problem. Especially if you want to be on the investment side of it. And that even if you're not the GP, but if you are facilitating a transaction and if you have a experience finding an operator and a sponsor or a capital provider and an operator, that's a 100% where I would start. Um, and it's a very capital intensive industry. And so because it's cyclical and capital intensive, raising cash, having ample cash, having contacts with cash will protect your downside a ton. That'll give you a lot of flexibility in terms of where you could buy, what you could buy, things like that. If you're trying to get more so on the service side of it, or if you want to own a rental for secondary income, I think that spending some time on Zillow, as silly as it sounds, it's probably what people are doing. But spend time on Zillow and start thinking about this as like almost like a stock or a sports bet. I don't want to use the sports bet analogy, but it's just very applicable to a big part of the country. And what I mean by that is come up with a buy box. So, okay, what can I afford? What am I looking for? Is it rent? Is it appreciation? How long am I going to own this home for? And all those things will factor into the age of the home, the bedroom count, the market you want to invest in, what submarket within that MSA you want to invest in. How much time are you willing to spend on tenant issues? Are you going to have it third party operated? And a lot of this stuff can be found on Zillow. So find my property manager, find my broker, having conversations with local professionals who wake up in the morning, transact on single family real estate, go to sleep at night thinking about transacting on single family real estate, all within that specific area. You'll learn a ton. And so you go through Zillow, you look through finding brokers, you look at finding property managers, you come up with a standardized question list, and you're aggregating data. Then you go over to the find a property section and you do the same thing. You start to filter for your buy box based off the data you receive from those local professionals. And before you know it, you'll start being able to understand whether or not a property meets your criteria and whether or not this is worthwhile investing in. And take your time. That's the greatest piece of advice I could give because once you own that property, you own it. And so you have to deal with the good, the bad, the ugly. And just because it looks good on a spreadsheet does not mean the investment's going to go well. So take your time and lean on local experts. They will make you 10 times smarter than you currently are on buying rental properties in that market.
Now, I forgot to ask, but I definitely want to ask before we go. With your properties, are you managing these properties in-house or do you use third-party management companies to handle all of your properties?
Yeah, so we used a third-party property management company. I think once we got to about 10 units and we were going across different markets and we were getting different management reports or we were self-managing a couple properties, it just became very difficult for comparison reasons and then also just in terms of having visibility to what am I going to need to put cash into our bank account this month? Am I going to be able to distribute cash this month? Having different reporting on different cadences really was a bottleneck. And so we were able to onboard to a nationwide single family rental property management group. And the way that they run it is really tech driven leasing and contracting. And that's really all you need is just a way for people to view the house when it's going for leasing, a way to get the property ready for showings as quickly as possible. And that's where I think AI has already made significant strides. So we have a bid on a turn repair. So tenant moves out, there's some damages to the home. We got to clean it up to get it rented back out. We have multiple quotes based off of photos of the unit when it's vacant. We take those quotes, we negotiate those quotes, we work with one of the contractors. In the meantime, we're already listing it on Zillow with showings coming soon, and we are taking lead data. So Zillow lead data to determine, okay, is that price for the showings coming soon the right price? Do we overhang the market? Do we underhang the market? And then while we are actually going through the leasing process, it's all AI chatbots scheduling these showings. And then the tenant shows up and it's self-guided tours. And so self-guided tours is something that I don't think was even heard of 10 years ago.
Right.
Now it's something we run at 100% of our properties, and I was hesitant at first, and now it's the best thing that's ever happened to us. And it's really because just when somebody wants to go view a property, they can. And we've not had issues with the home being left in poor condition, and a lot of that is because of the technological advancements that have been made especially with cameras and AI taking a snapshot or a picture and converting that actually quantitatively.
Got it. Yeah, that's cool. Cool technology for sure. Is there any final question? Is there anything else you would like to add?
No, I think just for folks that are trying to get in touch with me, whether or not you want to learn more about real estate or some of the work that we're doing with institutional light allocators on alternative investments, follow our newsletter, follow my newsletter, The Allocation Memo. And you can find me on LinkedIn. That's where I'm most active and most available.
Awesome. Daniel, it was a pleasure to speak with you and to spend this time. And I appreciate you being honest and generous with your time. So thank you.
Thank you, Robbie. It was great hanging out with you. And yeah, looking forward to seeing the episode and following along for the other ones too.
Right on. All right. Thanks, everybody. We'll see you on the next one.